Parented. Okay, you should see it come up, right?
Yeah, it came up.
Now I'll say pause. Do you see it or no?
Something is loading. Oh, we are on the tube. Yeah. Zoom. Okay.
Should see it come up, right? Uh-oh.
Yeah, it came up.
It's loading slow. Is it behind? I'll say pause. Do you see it or no?
Echo. Something is loading.
Okay.
Oh, we are on the tube. Yeah. Zoom. Okay.
All right. All right. Hold on. Hold
Yeah.
on. Let me. Okay. Okay. We gotta. I'm trying to. Hmm. Why does it have that delay?
Echo. Did you turn the volume down?
Is it still echoing on your end?
No, I think you turned it down, so I'm not hearing anything.
No, it's like behind. Like the
Mm.
real conversation is behind like 5 minutes. How do we cut that off? Why does it have that delay? Hey, see?
Echo. Yeah, right.
Is it still echoing on your end?
No, I think you turned it down, so I'm not hearing anything.
All right. Something I'm not doing right. It's like behind. Like the real conversation is behind like 5 minutes. The meeting is now on Why YouTube. Does it have that delay? Okay. See?
Echo. Yeah, right.
Is it still echoing on your end?
No, I think you turned it down, so I'm not hearing anything. I don't know if you mute the, I don't know if that's gonna mute the actual video if you mute it on YouTube.
Yeah.
Oh, yeah.
Okay. What about now? Can you
Oh,
hear
it
me?
stopped. Yeah, I can hear you. It's not sharing your screen anymore though.
Okay, hold on. Let me see here. Okay. Now, okay, dude, is that on? Let
Yeah,
me
it's back.
let me go to YouTube on my other computer here
Mm-hmm.
and see if I can see this stream. Fun, fun, fun. Not seeing nothing live that says live. Why not? Why not, Rich? Come on. No, it's not showing. Ah, two. I'm sorry, I'm gonna have to play with this then. It's
Mm.
it's not showing. It's not showing live right now. Oh, there it is. It is showing live. But I wonder if it. Hello, hello.
Echo.
Play with this then. It's not showing. It's not showing. Okay, maybe on this. Okay, so it is coming through on that end. So I think we're good. I think
Mm-hmm.
I think we can roll. This is kind of neat. Let's see how this works. All right. All right. Let's get into some meat and potatoes.
Salmon and potatoes.
Salmon. Okay, you're right. We leave that red meat alone. All right. Some of it's good though. All right. Let's I am going to first off let everybody know this is educational purposes only. We are not giving out recommendations to anybody for any type of trade, and this is educational purpose only. Please seek a qualified investor at all times, as we are only doing this for educational purposes only. All right, I am Trader Rich. We got Options Willie. Billy be on it sometimes, and then we got our awesome student who is learning and building, Kelsey. She is joining us, and she is going on this journey to learn these things. And we're going to go in here and play around. Now, Kelsey, you have on your charts an 8, a 200, and a 20, right?
Let me double check.
Yeah, check and make sure. Hopefully it's saved.
Should be this time.
Now, the charting platform that we are using right now or today, you can use any platform you want. This one happens to be Thinkorswim, okay, which is a very popular platform of TD Ameritrade, or now it's Charles Schwab, since they have merged. This particular stock, but you can use these moving averages. So we use an 8, a 20, and a 200. Those are our main moving averages. We do use some indicators to confirm what we see, but this is the main part of our legits. We're using candles, trends, support, resistance, and moving averages. The normal that most people will use to look at stuff. Some people got VWAP. We do use the PPS, which I will go over at another time, but those are the main indicators. So, Kelsey.
Yes.
We gonna review some things. We gonna go over some things here. I'm trying to get rid of some of these lines.
I think I'm missing the 8, so I'm gonna go ahead and add it.
Okay, the 8 is this like maroon purple. Your 200 is normally orange. It's not set right on this particular chart. I'm gonna change the colors just so. We usually have an orange on our charts. And then a 20 is always like a bluish color. So it stands out like a light green almost.
20. Okay, and you said the 200 is like orange?
Yep.
Okay. All right.
All right. So we have this particular stock here in NVIDIA. All right, now one of the first things we do, obviously, is look at the market, but we're just going to dive into some stocks. This is NVIDIA. You can see it made this top here, right? You call this what over here?
The resistance.
Right. Now, you had a stoppage here. Let's keep it simple. Price action is very important, okay? Now, you had what we call elephant bars or bigger size bars. The bigger size bars is more bearish or more bullish, depending on the size of the candle or the body of the candle. The elephant bar, which is Oliver Velez's favorite term, is a very powerful candle. So we had one here that went up and then it sold off. All right. Then we had the doji here. This doji is a sign of what? Remember what a doji gives you?
The doji gives I mean, it's showing a loss of momentum.
Well, remember a doji, when you get a doji instead of a body, the doji is really giving you type of resting or indecision or possible reversal. In this case, you remember this candle right here?
Is that one is the hammer?
That is the hammer. The hammer comes in what type of trend?
Uptrend. Yep, uptrend. Yeah, because the body is on the no.
Remember, candle reversal signals always think the opposite. Candle reversal, a bullish reversal signal always comes in what type of trend?
Wait, the question is I'm confused.
So the question is, when do candle reversal signals actually signal the reversal? When is it actual not
after?
Say it again.
After the trend. So if it's a bullish reversal, then it's after a bearish trend.
Correct. So what did we have prior to this? And this is a short-term view. We only looking at 3 months right now, but what did we have temporarily here between October 12th and October 31st?
A bearish trend. I'm sorry, bullish. Oh, bearish. Sorry.
You had a downward trend, right?
Yeah.
Okay. You
that
got
should
a hammer.
like zebra or something because bears and bulls. Oh yeah.
The bear strikes down. The bull strikes up with his head. So a bear will stand on his back paws and strike down, and a bull strikes up with his head. So, question: where did this hammer appear? It appeared in the downtrend, but at what area?
Towards the end of the downtrend.
Well, I mean, the hammer gave you the signal that it was the end of the downtrend, but before that, you had. We'll go over. But why did it stop? Why is this hammer significant right here? Any idea?
It's confirming the doji before that was showing indecision.
Correct. What else?
That's all I got.
All right. So right here is what? What happened?
A floor.
A floor appeared. You have 1, 2. This is called what they call in candlesticks tweezer bottom because it came to the exact same area, maybe pennies of difference. Okay. Well, in this case, it might have been a couple of dollars. It might have been $1, but in your mind and in your eyes see pretty much the same area. That's really what we're looking at. We're looking at the psychology of this, and it really try to trade down into this zone. Remember, always remember that support and resistance are zones. Then you had this doji. Now, this doji, again, is indecision, right? Look at the size of the candles beforehand. All right, those are very bullish. So we get this doji that's very indecisive. What is this candle made up of?
More candlestick. Yeah.
Bull is made up of bulls and bears, people buying and selling. So if they couldn't continue this downtrend right here, you had a bottom here. This doji closed at where at? Did it close up or lower?
It closed higher.
It closed higher. Look at the position of the doji. See how it's over here? When it's near the top of this the prior candle. So that tells you that people were buying this stock right here. Okay. Now, a lot of times what they do is they try to shake out weak hands. So you can see here, they shook them out. They drove it down. People jumped out of it, but this was just an opportunity for the same people that's buying here to now go into the stock. So if we in a downward move here and we seeing this setup here and we starting to watch this to catch it coming back up, we see this hammer forming, you know, we buying this at the end of the day. Or more advanced trader, I mean, that's a more experienced trader, I would tell you to wait for confirmation. All right.
Right.
System. So this would have been a good day to buy here, or what we really want is above the 200. I mean, not the 200, above the 20. Okay. So this actually is the ideal day to buy it right here on this, the 1st of November.
Because of the resistance line, right?
Not because of the resistance, it's because, okay, you had your hammer, which we know is a reversal. Okay. Now, a lot of times on hammers, they will try to retest the bottom again on the hammer, and then it'll take off. And there, or sometimes you get days like this. So this particular candle is very bullish. All right. It is what Oliver would call an elephant bar, but we just call it a bullish candle, right? So this candle confirmed this hammer. So now you could get into this stock. Now, we don't like to get into, you know, I would tell you to get in up here at the 20, above the 8 where it's crossing. It's pretty bullish. Our 8 is crossing above the 20. This is pretty turning very bullish. So this is the more safer trade. This is the more riskier trade. All right. But you're using everything you do, because if you do get in on this candle, your stop should be right below here, right? Because this is where that resistance was being established. Because even on a hammer, you could see how it opened, it went down, it went up. So again, this area that it was stopping at is still an area of buying, okay, or area of support or area of buying. But so we have this candle here, it pops. So what happened here? I'm gonna get rid of all this. I don't know, working for me. Do too much. All right. All right. So what happened between this candle and this candle? Can you see it?
Yeah, there's a small jump.
There's a small jump, or what they call gaps. Now remember, we have put thoroughly into gaps, but remember there are 4 types of gaps. All right. In this case, you have what they call a breakaway gap. All right, breaks away from price. It leaves a small, like this area here. I love it. When you get these small gaps, these are very powerful. This stock goes from this area here where we would have entered on this gap. Okay, usually a stock, I would say 70–80% of the time will go in the direction of the gap. Okay, now if we had a gap up here, and this is, we had to go back more on the data, but if we had a gap, let's say you're on a 3rd or 4th gap. If you're on your 3rd or 4th gap and a chart hasn't filled in those gaps, that is more than likely becoming an exhaustion gap. Okay, and the exhaustion gap tells you that the market is getting tired. Okay, you have your common gaps where you have your little small bump up, so we might have those in here. You have a runaway gap where the stock just gapped away from the whole area of like tightness. It just broke away and just took off. Okay, and then you have an exhaustion gap where it might have been gapping, gap, and then boom, another gap. So at that end, you know, like, okay, this is just too much. All right. And then you start to see that gap up, and then you start to see it sell off. So we're gonna continue to talk about gaps, because gaps are very important. All right. So we gapped up, we entered the stock here, and we will ride it up to here. All right. Now it got up to here. Now you can see it's a nice steady trend, even though you got some smaller body candles, but it's still moving. You had this candle was red, but is this candle actually green? This is a software thing right here, but I'll tell you why it does it. It's just a computer thing. Go ahead.
Did it closed higher or lower?
It closed lower.
Mm.
Okay, remember, because no, it closed higher for the day.
Okay.
It closed lower on the candle from where it opened. So this candle opened at 474. Well, first the previous close was 465.74. It gapped up and opened at 474. So it gapped up 5 points, right? No, it gapped up 9 points. Dang.
Oh, wow.
So, but then it closed at 467, but it never closed this. It's a small little gap in here. Even though it's red, there's a gap in there. So it sold off. People basically took profit. These people that got in down here basically took some profit. Then they started buying back in right at this level of what? Look at this.
Resistance.
Look at this old resistance becoming new support. Look at that. So what happened here is that these people that got into this stock, right? And this is exactly what happened. These people that got into this stock to buy it, to go long, got caught in this down move. When it got back above that price, what did they do immediately?
They bought, they sold, they got their profits and then, right.
They sold it because now they're back to break even, right? So because when they got in it was at let's just say 476. Now it was trading down here at 400. They lost 100 something points. No, almost 200 points. So when they got the 200 points back, those people were just happy to get their money back.
Right.
So they got the heck out the way of this thing and said, maybe we'll get a better position, better chance to buy this. And then they got out the way. But you can see it continue to go from there. So then it tires out here and we got the resistance. Boom, boom, boom. We even had a nice green body that would lead to this thing probably going higher. But then it did not break. Excuse me, man. Came out of nowhere. You see it did not break that area of the next candle. But the doji is still bullish. Look at the position of the doji. Now, this is a warning sign because this is called a bearish Harami pattern. Okay. This body is inside of this body and it's kind of a sideways system. So it's almost like what they call a pregnant candle. In this case, this is pregnant to go to the downside. Because you got a nice body, bullish body, then you have a nice doji next to it. Now the doji closed near the high of it still gives it the potential that it can go higher. But that's not what happened here because the next day it confirmed that, look, it even popped up to that resistance and then it sold off. So that's how you know to exit this trade at this point here. You should be exiting this trade. From there, look what it did. Boom, boom. We had a little bit of support in here, and then it kind of rolled that there before breaking down again. And it broke back down into this area, and then it started working back up. All right. So we had this candle here. Is this body engulfing this body?
Yes.
Okay. Then we had a candle. Now look at the psychology here. And this is why when you're dealing with options, we buy time, or if you want a day trade, you just play the day and that's it. If not, but if you got time, look, you buying this option out, swing trading, they call it. But look, psychology here. Look how the bottoms just held 1, 2, 3, 4 days in a row. So even though it's not taking off, there's buyers coming into this stock. Look, 1 and then 2, then 3. So it's 7 days of boom, 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 boom. And look at the lows getting higher and higher. So basically, you're just sitting waiting if you're trying to swing trade this, or you're buying this option down here and you just holding it and you waiting for it to pop. But again, with options, we have to make sure that we're giving the stock time to go. unless you're day trading. It's a different story. So, but if we watching this and we know we like this stock because it's been bullish, it's just having these little pullbacks. It pulled back to this area here where it was prior resistance. Is back into that same area. You see, boom, boom, boom. But it's not going any lower. We can just buy it and start loading up on these options. Now, NVIDIA options are very expensive, so you got to have a big account. But you can buy a 2-week option of NVIDIA. Let's take a look. Actually, let's do that. A 2-week option on NVIDIA. So in this case, let's say if it was today, December 29th, one at the money, 54-cent delta or 50-cent delta is $1,200. So we always times it by 100, or 500 is 11. That's $1,120. So you could have played that. You could have played it. You could have bought it, and you just sit and wait. So now let's see what happens after it decides. We got another green body, right? Is this candle is what? Is it candle engulfing this body?
Mm-hmm.
So that is what they call a bullish engulfing pattern. So now these patterns come after what type of trend? After
a bearish trend.
Correct. So this was a slightly bearish trend right here. Pulled back from 505 to 460. I'm sure on a Fibonacci. We're not going to do that today. It probably will line up with like a 23.6 or a 38.6 type move of a Fibonacci numbers. Markets work a lot of time off Fibonacci numbers. So you have two bullish engulfing patterns here. So this is screaming at you. You take this candle and you combine it together, and you have what you call a bull Sasha pattern. Because this high is taking out this, it gapped up into this red candle. You combine these two candles. Well, one, you had three patterns. So let me slow down. You had an engulfing pattern here, right? One, two. You had this red candle show up. It held support. That's 3. Then you had this candle here inside of this body. So this is what they call a pregnant candle. This pregnant candle is called a bullish harami. All right. Then it popped up. It went higher, which is a positive sign. And if you combine it, put this candle on top of this green candle, and so this gapped up, boom, closed up here above this high. That's called a bull Sasha. That's one of my favorite patterns. Very bullish. Then you have this pattern here again form. You had a red candle come in the next day. Still didn't break any no lows. It actually made a higher low. You had a bullish engulfing pattern again. So you got 3 clear signs of a bullish reversal coming in this stock. So your job is to identify this and then ride this thing out. All right. The next day, confirmation, we break above our 20. If you haven't entered this stock, this is where you enter in this stock. And you are still able to enter the stock here. All right. To ride momentum to the upside. And that is what is here. This stock is here. It's trading at 498.13 right now. It's pretty volatile. Been as high as 500 today. 491. Now, NVIDIA is a very volatile stock, and it moves heavy.
A question.
Go ahead.
Yeah. So, which candle did you say we would get in, or you said that we could get in today?
You could be buying here. You could have bought today just to catch momentum. Now, if you're buying today, you're obviously going out a little bit, but you're okay with buying out. One thing we do like to see is we want to see a 20 kind of rise, but this stock is rising. But I believe it's going to try to go back and test this 505 and see what it does. If it does that, I have to get some follow through on my 20-day moving average to follow this stock to the upside.
Can we look at it?
Say again?
Can we look at it on a smaller scale?
Yeah. You talking about like on the intraday?
Yeah.
Okay.
Intraday.
So this is hours. So these are some of the lines that we drew. Let me clear off some of these. It transfers over from the daily.
Mm.
So that was a daily, but there was clear signs about his stock. So we like the 20 to be with the 200. All right, that's the clear.
Right there.
Yeah, that's a clear trading rule that we love, and it's um, one that Oliver and a few other people use as a clear trading rule. So you can see here, look at this, boom, 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 boom. So here, bam, right here, look at that turnaround. This matches up. This is on 12/14. So right off the 200, right off the 20, boom, we buying this. We could have caught this big move right here the next morning on the 15th. Look at that.
Yeah.
Move, man. And then remember our 50%? Okay, so look at this. 50% candle, 55%. As long as it stays up in this, the higher the pullback stays at the top of the candle, the more bullish the stock is. So this is more near the top of the candle, about 25% in, maybe 30, and then it popped the next day, which is today. We getting the same type of action. We see if it hold, but we get the same type of action we got over here on this bullish body. Now it's pulling back a little bit right now.
I have a question.
Go ahead.
So, like where it's pulling back, could that be where like I don't know, maybe day traders are taking profit? Like is that how that works?
Yeah, day traders taking profit. And
Right.
people with Nvidia is a highly popular stock.
Mm-hmm.
Because it moves a lot. It moves a lot. That's what they have, a high ATR. So if you ever really want to know how a stock moves, you always use a high ATR. So in this case, boom, boom. And again, anybody joining us, this is for educational purposes only. Please seek a qualified in trading or broker to do your investments with. So here's ATR. So we go to daily, we can see that this thing probably moves 13, 14 points a day. Now that is in a range. It doesn't mean it's going to go up 13 or 14 points. It just says it's going to move in that range. All right. Let's look at some stocks that's absolutely printing today. Besides, now Nvidia's doing well. Okay. Netflix. Uh-oh.
NFL.
Right.
Okay.
Netflix, it done pulled back a little. You see, Netflix was up to 492 today. It was up 18 points. But look at this trend on Netflix. Let me take this 18. So Netflix moves 11. So this is another stock that people trade for the options for the week, or they day trade, or they just invested in, or they swing it. In this case, this stock.
What's swinging?
Swinging.
I thought that was day trading.
No, swing trading is where you holding the option or the stock for like 4 to 3. Some people it all varies. Some people say 3 to 7 days. It's really you're holding it for multiple days to get your move. Now, with a Netflix, you could be in and out of this trade in a day or two, because it's gonna make you, like, if you caught this move today, I mean, it went up 18 points. If you had this move over the weekend, you were beautiful. The question is, could you have been in this stock over the weekend? Let's take a look.
Let's take a look.
All right. So you see here, here's the uptrend, right?
That's I'm so confused with the dates. Okay, because that's a month ago.
What, this uptrend here?
Yeah.
Yeah, it's a month ago. Why are you confused?
Oh, okay. I thought we were looking over the I don't know, the weekend, but I guess this
we
wouldn't show.
gonna get there, but I want to break the chart down because I want you. This is how you should be breaking down charts and analyzing.
Okay. Okay.
You got to get an understanding of what's going on with the chart.
Mm-hmm.
All right. So this is something I definitely want you to be doing now. So hold on one second. All right. So what happened right here on the 19th?
We had a gap. Big gap.
Big gap, right? That's from earnings. So you can see that this number, which is actually the low of the year, was an earnings report number, and it was good. So it gapped up, and then it traded sideways. All right. It gapped up with people start taking profit. Boom, 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 boom. It comes right back to the bottom, or in this case, the top of the gap, right? So this whole area of this gap is what they call a what area?
Say that again.
The whole area of this gap is called what?
It is
this whole area here is go from 357 to 396. It's a huge gap area. What is this area called? Area of it gap up. So when it gaps up, what does that create? So when you jump to the next level, what is below you?
The floor zone.
Right. So that is a huge floor zone that is created. All right.
Okay. Yeah.
So then you can see here, this particular stock pushed back to the top of the zone, and then it popped up, right?
Right.
Okay. So now why do I have this line through here? It's so weird. So it popped up and it just been pushing higher. We took a break right here where it traded back. So this is how we know we got good money coming into this stock. So our 8 moving average, right, which we rarely talk about. Do you see how the stock is just bouncing off this 8 moving average, boom, or staying right above it?
Yes.
When it's doing that, that tells us that institutionals are buying this stock. So that's the money that we want to behind our trade. All right. So when it keeps
that's the purple line, right?
That's that purple line. That is it. It tells us that 1, we have a solid trend in place. 2, we are trending in the right direction.
Okay.
All right, and we're following the money. As Cuban good to say, follow the money. So we following the money. And hold on. We following the money, drew this whole trend up, right?
Right.
So it gets up here, and I'm gonna remove this line. It's 2 of them. Oh man. Let me draw that. All right. So we start to top out. What is happening here? 1, 2, 3, 4, 5 days in a row. It went no higher than this area, right? So that is creating a what zone?
That's creating a resistance zone.
Correct. All right. We pulled down. So if we had an uptrend prior and we have a pullback like that, what should you be thinking in your mind? So we had a pull up like this. We went sideways. We went down. So now we're taking profit from here, right? From this whole thing. But what should be your mindset going forward?
Okay, my mindset would either be taking profit and finding.
When it broke down here, this candle right here, or even this candle maybe,
Mm-hmm.
All depends on your position and if what option you might have been. You've probably been out and back in this position a couple of times, possibly. Or if not,
Mm-hmm.
if you had it for this long, then yeah, you're definitely getting out on these two candles.
Mm-hmm.
So you took profit there, but what
Mm-hmm.
should be your mindset as this thing is what they say pulling back? What should be
Um,
your mindset?
checking to see where it's gonna pull back to.
That's one.
Uh-huh. And then possibly where to get back in.
Where to get back in. Exactly. How
Yay.
can I get this? How can I catch this bullish stock going back up again? Okay. Now, ideally, we want to see it pop back above the 20. All right. So on this particular day, you probably could have caught it and caught some of this coming up because this stock went from 460 something all the way up to 480. So this was
Mm,
a big day up.
yeah, that's a
And
good move.
yeah, so you could have get in and out of that stock in one day, possibly.
That's what a lot of people did, I see.
Yeah. And then the
Uh-huh.
next day, people took profit because it went to the same area, came back,
Mm-hmm.
and then it went down. It now this stock went down more than probably 50% of that candle. Now, when that happens, that opens the door for some weakness to the downside.
Mm-hmm.
In this case, it went there, but what did it run into coming back down?
That the floor from the other, yeah, the floor.
There's a floor from
Mm-hmm.
there's a floor, but then there's the 20 and the 200. I mean the 20 and the 8. See how
Yeah.
they're together? So
Yep.
the 20 is a sign of strength and also can be used as another level of support.
Mm-hmm.
So when it got there, it bounced because people like to buy off the 200. The big boys like to buy off the 200, and when it's bullish, they like to buy off the 20-day or 21-day moving average. So when we see this, we get this candle here, right? Or
Mm-hmm.
we get this little wick here. So long as this is not breaking down, we can start to buy this stock. And on Friday,
Right.
this stock was giving us a sign to buy. And then look, what did it do today?
It continued to it did it gap?
It gapped. Let me see if I can blow it up. So if you held this over the weekend, you got paid today.
Mm-hmm.
Got rewarded for your chart reading. You got rewarded. And so now it's pulling back right now. And it might come back down and it might be done. But it gave you the move all the way up to 492. But it is lunchtime. A lot of times around 11, 12, 1 o'clock, people take profit in these type of stocks because they have made so much money. And then they get back in the afternoon at a lower price, or people start loading back up. So this stock might be back at 492. So one thing that we can do, let's say we wasn't in this stock and we getting this pullback now, we can now look to try to identify, can we get into this or where can we get into this? So like here, 481, 483, this is a good area possibly. Now I don't have my other indicator, but we're going to do this the best we can. So we could here, we getting these wicks up here. We know that this is resistance. Put them back. Boom, boom, right now. Let it pull back. Here, let me get rid of this ATR. Okay. So now you can see with the upper half of this big candle on the 15-minute, 20 is coming up. So we looking for a reversal here. If it can come in this range of 480 to 483 where it's trading now, this might be a good area to buy. Back up. Now, if it falls, then our stop is right below there and we out. Or we can make the 20 our stop. As long as it stays above the 20 at 479, we good. But we can see this on this 5 minute and on the 2 minute. Look at that. Boom, boom, boom. Here is your bear Sasha pattern. Your bears, not bear Sasha, your bullish, dang it, I'm tripping. Bearish engulfing pattern, downward move. Now each candle represents 2 minutes, so you can't panic on these. It moved up, boom. If this stock gets back above this 20, then we can buy it back up as a day trade or to swing it overnight.
Can you say that again? You said if? Okay.
If it gets back above the 20.
Okay.
On these short
right
term,
now,
go ahead. Go ahead.
Right now it's technically bullish.
It is bullish because our daily chart, but temporarily on the short term is bearish. But it's bullish overall. So what we're trying to do is figure out the best area to get back into the stock, if it's going to allow us to, if that makes sense. So we are looking for opportunity to trade this to the upside.
Okay.
So you can see that it is now pulling back, which seems like, let's go to the Qs. So right now it has not gave us opportunity to get back in. Now, some people will attempt to buy here and keep buying and buying, but I'd rather you buy when it breaks back above a 20, because that means that is going to be your momentum move. And you could use a 15 as a foundation of that. So now we're above a 20. So a lot of times you do the 15, then you come to the 2 to place the trade. All right. Once you get back above a 20 here, there's a chance for it to go. And you want to make sure you wait till the last 15 seconds of that 2 minute, and then you can get your move to the upside. Some advanced traders will buy here off this area here, because you kind of, again, at that zone, boom, boom, you at a zone area, right?
Right.
Now, if it break above this 20 on the 2 minute, you grab it. You can see it attempted here, but you want to wait till the last 15 seconds of that 2 minute. Use your clock here. In this case, we got 15 seconds of this particular candle. Then we'll see it switch over. So if it's above the 200, or in this case, the 20, with 15 seconds to go, then you take that trade.
Can you break down I remember we talked about this last time, but you're saying to like wait to the last 15 seconds to get in. What does that confirm?
We're confirming that it's going to hold up, because a lot of times, so like here, this is perfect right here. You see how it was trading above we got this long wick. Even here, we had a red body. It was trading above the 2. It was trading above the 20 during that 2 minutes. But by the time that 2 minutes came to a closure, it was where?
It went below it.
It went below it. So that's why we want to wait. We want to wait for that 15 minutes. Hold on 1 second.
Okay.
All right, I had to get my water bottle. Let's get room. All right.
Yeah.
So Netflix trying to move up now. Let's go back to our NVIDIA trade to see if we had an opportunity to get in. There it is. So right here, bam, we buying this now. We can wait. No, we got a minute left. See how it's coming back down?
Right. Right.
But we could have been buying over here. Look at all this bottomness. We could have just took a shot and we lighten the video right here. Now,
because I think,
go
yeah.
ahead.
Yeah, no, I mean, I just remember I was in Apple. We got in and it was low, and then it went sideways like that for a little bit before it went back up. But I don't think it was on the 20 though. I can't remember.
Now we're gonna talk about Apple in a second here. Apple is down today because of some bad news in China.
Oh, that's what it is. Oh, is it the bands? That's what it is. Yeah. Oh man.
Sometimes the chart can be the bullish. It can be as bullish as all get up. You do whatever, but if something negative come out about the company, ain't nothing you can do. Yeah.
Well, okay, that's good. This is my first time now, getting some news that's affecting my stock.
Correct. Yeah, it's nothing you can do about it. But here's the thing: the news is not like end of the world company. So you see how this candle just finished above a 2. We can take this trade based on the 2-minute, or we can go here to a 15-minute and see. Look, it's still bullish. We still looking for this to go higher. I mean, it's riding the 8. It didn't break the 8. It's still bullish. So we have not gotten a reason. Let's go to our hour, which is our foundation. It's trading above this 25-30% area, this top candle. It's still very bullish. It's very bullish. Now, I would love you entering this trade for maybe a 1-day hold or a day trade. You want this hour. We want to be back. We want to try to buy more near this 20. Right now, we're buying momentum. So we want to keep buying the momentum of the stock. And then we're playing for like gaps overnight. We take profit and look for another entry. So like this gapped up today. There's a good chance if we can get some pressure on this 20, start moving up, that this thing is going to go take out this top before selling off again.
Okay. And one more time again, the 8, right? What does that show, that trend?
The 8 is like an institutional type trade. Institutions are keeping their money in the stock. They're adding more money into the stock. If it's trading above that, that's like good institutional buying, especially if you're seeing the stock bounce off of it or stay above it. It's like good institutional buying coming into that stock, or that institutional money is still there. Let's say it like that. It's still sitting around waiting.
I get it now. Okay, because we want to go with the market. So basically that's showing us like what everyone else is doing. I mean, I know that's obvious, but it's just clicking for me now. That makes sense.
Right. Yeah, no. Yeah, we want to be where the money is.
Right.
So the money is staying there. We want to stay in there.
Yeah.
At all times. Now, let's go to Costco. Good old Costco, looking good.
Oh, Costco.
Oh, what a wonderful company this is. This is a well-ran engine. Costco. They just run their stores beautifully. When you walk in, the store is operating at a different level than a Walmart or Sam's Club.
Oh my gosh.
And well, BJ's is okay. I think BJ has a certain niche that they follow with the coupons and stuff like that. So BJ's does a good job at what they do, but they're nowhere close to a Costco or a Sam's Club. Sam's Club is just a glorified Walmart to me, and it sets that atmosphere when you walk inside of it. It's like no difference between Walmart and Sam's Club to me. You just know that's what it is. So in this particular trade, you could have been in this thing on, now they had earnings, so that kind of takes away from everything that just is happening now, because this is momentum from the earnings, okay? Costco will have a little violent pullbacks, and then it just continues to go stronger. So like this was a 2-point pullback, and then it just shot up, continue to shoot up. So this particular stock has been bullish. And let's go back. Where my 6 month at? Okay, this is a year. You see the stock took some time in here in the middle when the market was kind of sideways and down. But then recently it's just been parabolic and it's been moving higher, higher, higher. So it will pull back eventually, but it doesn't have to right now, okay? The stock is strong. It's very strong, but I do believe we get to a point where it might settle down. And it did get upgraded again today, so that's one reason why it's up today. But I believe it might rally it up until Christmas week. They have what they call a Christmas rally, and we are heading to that week of Christmas coming up on Monday, which the markets will be closed. We are at a point where markets like to rise up until Christmas. They call it a gift, and then they sell them off right after Christmas. All right. So we kind of at that level. It seems that we're up, and then eventually we're going to sell off. But it doesn't have to happen that way either. I'm just telling you what they do. So Costco has been very bullish from down here. We have caught some of this move, definitely to the upside, including today's move. Caught a little bit of it. And we are, there go my 6 month. I'm about to say what my 6 month at. So look at these moves here. Okay. Let's go back down to the bottom. Let's just analyze this chart of what has happened over the last few months. Boom, bottom's made in here. Okay, support zone is made in here. We are bullish. Even in here, why are we bullish?
Because it is above the 20.
Close. Above not the 20.
The 8.
No, not the 8, because remember this area is pretty much trading sideways, up a little.
Yeah.
So why is it still considered bullish?
It's above the well, I mean it's going up, like it's not, I don't know, it's above the 200.
There you go.
Okay.
It is above the 200-day moving average.
Yeah.
All right. So it is still bullish when it's in this little, they call them consolidation periods and stuff like that. Markets moving certain things. My head is not there right now to get you all of it, but you have certain phases of trends. Okay. You have consolidations, you have the boom part, you have just certain parabolic things. You have certain things that come into certain trends. I don't know why I'm having a brain fart right now.
Like it's a cycle.
Yeah, it's a cycle. So this was a cycle. Accumulation, the distribution. So like when you're accumulating, it usually happens when it accumulates like right here. People are accumulating the stock, but it's not really moving. And then eventually you get this blast off. Distribution, it starts topping out at the top or a resistance level. And then eventually it sells off because people are taking money. So that's, so you hear like accumulation, you hear distribution. There's another term for, but those are the two main ones: accumulation, distribution. Are things, words you start hearing as you get deeper into the market. So as it's gathering steam or picking up like somebody revving up their bike or car, we start to look for signs of stuff that when we can get in. So here it kept bumping his head. Boom, here it come down, bump his head or pound his feet down here. You start getting these shadows like this form of a hammer. You come down to that area again, you start getting these indecisive dojis. And then here's the fake out. Look, boom, it closes right below our support, right below. So they suck people into the downside, and then they turn around and look what the next day happened. Boom. Bear Sasha pattern. I mean, bull Sasha pattern. And but it just showed you the momentum of these buyers that's been buying this whole area. This whole area. They come in, boom. All right, they take a break the next day. That's why we have the higher closed doji on the upside of this. Boom, boom, boom. Breaks the 20. Now we're really looking intrigued by this to get in. Because now we're above the 20, and that's our buy point. All right, more experienced traders is buying here. Beginner traders buy here. All right, because it's safer and it's all about percentages. We putting stuff in our favor and we riding out the stuff. All right. So we in. It pulls back, but does it break the low of this big candle or break the 20-day moving average?
No.
Right. So if you didn't get in here or you did get in here and it pulls back, what is your mindset at this point right now?
I can get in right there. That's an entrance point.
Right. And what else should you be thinking? Let's say you were in it already over here. When this candle shows up right here, what should you be thinking on this day? Or even this red candle prior, but I want you to really look at this.
Say it again.
What should you be thinking on this day right here?
This day, if I'm not in already,
you should be getting in or adding to your position.
Right.
Now, you can see that was a nice move. 577 popped all the way up to 600. All right. It gaps down, which you should be taking profit. Gaps down. Then it turns up.
1, 2, 3, 4, 5, 6, 7.
Right. 7 days in a row. Went back up. Went right back to this area here. Turns down again.
Profit.
Okay. You could be taking profit. Now here, you might have gave away more profit than you wanted to because it gapped. It's okay. You get back in over here. It went up to that area again, failed. Not necessarily failed, didn't break the area, but it did go back up, which is about a 20-some point move, 25-point move. Came back down and did what did it do off the 20-day moving average?
It bounced, it went above it.
Correct. It bounced hard. And from there, it bounced. It started moving higher right off the 8. Boom, boom. Institutional start coming in. Look at the gap. This is a breakaway gap.
That's a good one.
Or a runaway gap, I would say.
Yeah.
Boom. And look, bam. Now this down day was here. So now as an option trader, we're not in the stock anymore. Right here. Okay, because they have earnings.
Okay.
We avoid being in stocks at earnings. It pops up after earnings was positive. The next day, we can get in the stock again and ride the momentum of the earnings report because the earnings report has its own momentum.
Okay, so did you say we get out before earnings?
Yep. So on this day here on the 13th, we were out of the stock, or on the 14th when it was moving down because earnings were after the market. We're out of the stock. We're taking profit. We can get back in the next day, but we're not risking because this as much as this candle could have been up, it also could have been down because anything negative in that earnings report that investors didn't like, it would have been down 20 points instead of up whatever it was. I forgot what it was. But it would have looked like this, and then we probably would have had a follow-through candle today. That probably would have been down too. And it would have been a totally new, what I call, it would have been a totally new outlook on this stock. It would have to come down, settle at a certain price that investors would like it at. And then from there, it might not even trade the way it was trading before. There's so many different things. So, in this case, the stock was higher. The report was good. And so we continue with this trend. So everything that everybody thought here, or even before that,
confirmed.
It's confirmed, and people love the report. The report obviously was good. That's why we have these. And then what happens is you have brokers and stuff, analysts that come in and upgrade it. But this stock has been a beast since back here in early May, late May, early June. This stock has been rolling. And it takes its periods of breaks and the ups and downs, and then it's just been rolling. So the last 200 points would have been a beautiful thing. Man, I can't stop yarning. So go ahead. You had a question? I think you had one more question on this.
No, not a question. I was just thinking out loud, basically. But what you were saying about the earnings is that it had the potential to basically start a new cycle or a new.
Correct. So do not ever try to trade. Don't ever try to trade options due earnings using straight calls or puts. Now there's different strategies you can use, straight calls and puts, but it's buying both sides and stuff like that. We're not gonna get deep into that right now, but you can buy different types of options when you are playing earnings straddles. They call them straddles, and I can't think of the other one now. But so you can play both sides, is what I'm saying. You could have bought a 675 Costco and a 635 put, and whatever happens after earnings, you could have been on that one side. That's a different strategy. You can do it that way, but if you just say you bought a call, you had the 675 call going into the earnings before the earnings report, and it came bad. Now the stock is trading at 635. Whatever money you put into that 675, you basically can forget it. It's gone. That's not the only reason, because I think we talked about a little bit on a couple of calls ago, couple of classes ago, where the option price, they inflate them, the volatility price of it. So at the earnings time, once that volatility or that news event is out, they deflate the options volatility back down. So that affects the price of the option. So on top of it not going in the direction you're going, they also deflate the price of the option. So on top of it, you're losing money basically on both ends. You're losing money on your option price because the stock didn't go higher, and you're losing price because the volatility is now coming out of that stock.
Okay, I have a question there. You mentioned the volatility, and then you said deflation of the stock price. Those are two separate.
The option price. So remember, the option price is made up of like implied volatility, data,
gamma, delta.
Yeah. My mind is trying to process all this. So it's made of data, gamma, theta, and vega, and it has what they call, it makes up a number of implied volatility, which they increase at earnings time because the news causes the implied volatility to increase. So they're expecting a big move. Matter of fact, in a stock. So like, let's go to Costco. No, they just had earnings, so it might not show up. So at their earnings report, they were expecting an 11-point move. So they build that inside the implied volatility. So in this case, you can see it's at, and this option for next week is at 18. That's a healthy number. Well, a lot of times at earnings, you'll see this number, and we'll do it on like the next earnings season because earnings season is pretty kind of wrapped up now. At the next earnings season, we're going to look at options before the earnings season start, and we're going to look at it as it gets closer. You're going to see how they inflate the price. So a lot of times you can, a stock like Costco, you ride it up to earnings, which some of it we caught, because they're going to increase the vol. When they increase this implied volatility, the price of the option is going to increase. So instead of this being 11, and I used to have a calculator, I have to find it. It's on one of my computers where you can put these numbers in and see how it will impact the stock. So at earnings or coming up to earnings, this might be running at a 40% implied volatility.
Oh, wow.
So
Okay.
instead of $9, that stock might be worth 13. So it moves higher based on that. So what happens is after the earning report comes out, it goes from 40 back down to 20. So if you got a stock that's losing steam, plus it goes against you, the implied volatility, you have like a double edge coming at you. You know, it's losing steam. I mean, it goes against you because they had bad earnings report, and also they took the implied volatility out. So your chances of recovering that money, unless you buy in time, a lot of time on that option, you're going to end up losing whatever money you put into that option. So you got to be very careful. You got to be very careful. The best thing to do is try to ride a stock up until their earnings report, get out before they announce their earnings. After the earnings, in this case, like Costco, you can get back in because everything resets and the stock is bullish. You can catch the momentum like it did here to the upside.
Okay.
All right. All right. So let's look at Apple. Then we're going to wrap it up. Oh, good old Apple. Let me look at Tesla.
Good old Apple.
So you can see Tesla's trying to break up out of this little area here, off the 200, off the 20. This is actually really ideal if we can get Tesla to pop a little bit. But again, Tesla is such a news-driven stock that it can become
yeah, definitely
hard to trade. Now, Apple is news, a lot of news. Well, a lot of news don't affect Apple like it affects others. So let us see what happened today. So we had some warning signs, I would say. We had some warning signs because we have this doji here, right? This doji, you see how long the shadows are?
Yep.
That is a sign, when you start getting a longer shadow, that is a sign of major indecision. Because you have a lot of buyers and you have a lot of sellers. They don't know what to do.
Right.
But the key is here. Because on doji on Friday, this is actually a gap.
Yeah, I see.
That was filled because the shadow went back up. But between the bodies, that is a gap down. It gapped down. It went up, it went down, it went up during the day, came back down and finished in the red. So somebody knew something because these dojis are a major sign of indecision. So they were either waiting for the news because immediately after the market closed on Friday, the stock was down. So they deliberately waited. Yeah, they deliberately waited to
get every penny, right?
Yeah, and then they wanted to suck as many people into the stock so they can get them at a loss. Now, Apple is still above the 20. It broke the 8. We could take profit if we caught that move up from that bottom there, or it all depends on what option you have. Now, Apple has a tendency to turn around and go back up. Okay, and we at the 20. You can see last time it came near the 20, it popped up every time. So Apple is a very strong stock. But it does have its moments of up and down. And you can see here, boom. So we down now. I don't like the fact that it gapped down today and it really hasn't filled that gap. That does worry me slightly. But Apple has a tendency to just do its own thing. Here we go. Here, there's the gap down. This is an intraday hour chart, which we will get more into the pictures next week of the hour of these candles and hour chart. So you can see here how I held this area from this gap over here. Is holding that area. So basically you just want it to stay above this area here. Look at that. Perfect. Get back above the 200. So it's trading this red candle. So as long as it stays like this, it's kind of in a sideways range. All right. Now, if it breaks this 200 breaks down from here, this area, 194, we could see a lot lower prices on Apple, maybe into the 190s before we go higher again. We could come back to this 191. And then we'd look for prices to go higher on Apple because of this news. So people are gonna kind of wait it out, make sure this news is nothing, and then they'll jump back into this stock right away. So this stock could be back up by tomorrow, but look, it's already trading up. It was down $3. It's only down $2.30 now. So we'll see. We do have a market that's near all-time highs. So we want to keep an eye on that because a lot of times markets trade weird when they get up here. A lot of volatility starts to increase when you get near highs and stuff. People like to sell, robots like to sell up here. People like to sell. You can see. So you can see how we're approaching the high of the year to 473. We're at 472, 46. So markets could get a little tired up here, but doesn't mean it's going to be done. I do believe we're going higher or we get that Christmas rally. 407. So we go into new highs and then we sell off later, maybe next week or not the end of the week. So look at our NVIDIA trade. Trading at 499. And then boom, boom, boom. So any questions we're gonna get off and then or anything you want to look at before we go? We might do this again tomorrow, if not tonight, but I'm gonna try to do it at least 2 or 3 times a week.
Yeah, no, I think we're good today. I think it was great. Definitely understanding a lot more now. So everything looks good.
Okay, the more we do this, the easier it's gonna come for you.
Yeah.
I hope this helps as we continue to look at charts and live while it's trading. It just gonna hopefully click in for you and make it easier and easier.
Yeah.
Trying to make it as simple as possible. Some of the stuff I got to get Billy on here a little bit, Options Willie, to break some things down for you too. But here's some stocks. Meta had a nice move today. This is Facebook up 11.
Oh, they did. Wow.
But look at the patterns. It was here in the charts. So it's easy to get caught up what the stock doing or bear, but it had bullish patterns all through this, even through this range where it wasn't really moving, but it was. And then it got to the 20, right? This is where we want to buy it, right in here.
Yeah.
We could have been buying this, had our stop below here, and we could have caught this move. Another one that's moving nicely today. It's Google. Now we would have bought this today. I would have been thinking more of a put, maybe possibly on this. It did come down to the gap though, which is support. this gap, and it's actually breaking that resistance. So Google could be something to put on our watch list to watch over the next week or two, or just keep an eye on this. We could actually enter this stock, especially if that 20 actually turns up here. Very bullish. So we'll see what happens. And then last but not least, everybody's favorite company, especially yours, because I know you like to shop, is Amazon is rolling based off they knew they want to go into some type of AI stuff or something. I don't know. But you can see Amazon is rolling right off the 200. I mean, not the 220. You can see it just kept bouncing right off. You could have been buying this the whole time, waiting for the breakout. And, boom, and it's up 340 today. These are some good options on Amazon. So that's how we look at charts. That's how we gotta you got a mindset you gotta kind of get. Just keep practicing. Oh, man, excuse me. Just keep practicing. I feel like I need to get up and do a workout or something again. Stop snowing, which is good. Yeah, we just gotta get it set up. And like here, like Amazon, you would have had to been options a month or so out because it would have drained your option prices because you can see the volatility. But now that it broke out, the longer you get a move like this, the bigger and longer the breakout usually runs.
Okay? Right. It's revving up the engine, like you said.
Right. It's tightening up the bands and it's going to release. Boom. So, and usually the move is parabolic. So we should see some follow through on Amazon. This might be a trade to buy actually for today.
Yeah.
Even if the market pulls back, which is the market being at these highs is prone, it can pull back at any given point. There's still going to be stocks inside of it that's winners. See, the stock ain't moved. So if it pull back a little bit, that's an opportunity to buy some.
Okay.
But again, it's educational purposes only. We're not giving recommendations. We're just letting you know what we like and what we would do. But all right, let's get off of here. Thank you. And let's talk. Maybe tomorrow we get on live again. Everybody can just check back at the channel. We'll see what happens. All right. Have a good day trading. Make that money. Now